But what would happen
Yeah.
if your market gets to a point where it just doesn't work? Your rental market may be lower, and
Hmm.
it makes it difficult. What would you do if you're in your local market if rentals are killing you and you have to lower or your math says I have to lower my interest rate to get the payment down to match the rentals. How would you handle that problem?
So the biggest thing is if I have debt on it is a spread, right? There
Mhm.
has to be a difference between what I have in the property with my lenders and what I'm selling it for,
Mm-hmm.
right? So it's the same thing from the buy. We make our money on the buy.
Yep.
So it's all about the negotiating, I never have more than 75% of, private money on a property based on the value of the property,
Yep.
right? So I like on average right now, I think we're about 63% across our portfolio. But the biggest thing is if the rental market, obviously, if the numbers start coming down on rents, a lot of times we see prices coming down, right?
Mhm.
And the prices on what we're buying the property for, right? Fortunately enough, in the upstate of South Carolina and the Greenville market, I mean, it's a hot market and it just keeps going up and up and up, which is great.
Yep.
But affordability is key, right? So, we got to be at that, 250, a lot of times less, 200 of the sale point. And so if I'm selling a property at 200, 210, I got to be all in it at 150.
Mhm.
Got it.
So that's another thing that I'm looking at is when I'm creating a note for my borrower, for me, where we make our money is in that spread. So one of the first things I look at is I want at least a $50,000 instant spread, right? Instant appreciation.
Yeah.
So if I have 150,000 into the property, I need to be able to sell it for 200 or more.